Welcome back, everybody. It is 11:15 a.m. on February 19th, 2026. Got Keith and Rick here. Rick, how are you?
Good, doing great. Hello, everybody.
Love to hear it. Been a little while since we've been back. We've been busy over here. We
Yeah,
had Arizona back in January. A lot of work going on. Watching the Olympics a little bit. You've been watching hockey?
yeah, I've been loving watching the hockey. I mean, I get sucked into a lot of the Olympics, but the men's hockey, the women's hockey's been fun too, but the men's hockey's been a blast. So,
The whole Winter Olympics, I'm slowly realizing how I'm a much bigger fan of the Winter Olympics than I am the Summer Olympics. There's just,
yeah,
I don't know, more fun stuff to watch. Sorry if you've ever been a huge fan of Summer Olympics if I'm offending you by saying that, but I never really got too sucked into the Summer Olympics, and I thought I'm not going to watch the winter ones either, but I have been. I've been watching luge, bobsled, the hockey, even curling, which curling sounded
yeah,
boring, but I actually am entertained watching curling.
yeah. I have a theory on that, and it's you can tell me I'm wrong. I think the Winter Olympics have a lot more danger in them,
They do.
and
They do.
uh,
Well, the
and it's a
luge for
horrible
sure.
thing. Well, the luge, the
And the
skiing,
ski
everything.
jumps, the height, the
The
I don't know what that one's
snowboards,
called.
the snowboard. Yeah, and I think as humans, like it's like when you watch NASCAR. Like NASCAR is fun if you like NASCAR, but the wrecks are really fun, and it's a horrible thing. I mean, what are we rooting for a wreck? It's
No, yeah,
dangerous,
that's
But
horrible. Yeah.
the crowd stand. We've been there. The crowd stands up when there's a wreck, and it's kind of wild. But I think the Winter Olympics have a lot more of that. But the horrible thing is they're young kids competing in something they've been working for forever, and we're sitting there going, "Whoa, that just
Look
guy
at
just
that.
crashed."
Yeah. Well, the guy
So
going down, finishing, what was that? Is that called slalom skiing where they go down over the moguls? But the guy finishing backwards and winning.
oh, that was incredible.
Oh my
Absolutely.
gosh.
That's the great stuff. You see someone like that just with that amount of skill that hits a really difficult position and then says, "You know what? I'm just going to finish backwards and still win."
Yeah. Yeah.
Yeah. Yeah,
Oh my
that's cool.
goodness.
And your mom and I went up to, I got to mention, to Park
Oh, yeah,
Omega.
yeah, yeah. You have any pictures you
So,
can share?
yeah, I got one here. So we went to a place called Park Omega, which is outside of Ottawa, Canada, and it was a blast because they have this huge, thousands of acres of land on which they have a giant nature preserve. They have elk, bison, wolves, bear, wolverine, and a ton of other things, and just a really great special place. And obviously, it was really cold because of the time of year it was, but it was beautiful. And we stayed in a wolf chalet, which was so cool because it's basically like a modern cabin, but the entire back walls, first floor and second floor, is all glass. So you look out the glass, you're sitting there having coffee, dinner, whatever it is you're doing, and what you see is basically, here you go, is this that I'm sharing. You just see wolves outside your glass. That's a picture we took. And an entire pack of wolves running around right outside the back of your cabin, which is absolutely one of the coolest things we ever did. Really, really neat. Good time. So if anybody wants an
That's
enjoyable vacation,
unbelievable.
yeah, that started with your mother saying, "Hey, there's this place. I think it's in Norway or Finland. Forgive me for not remembering. Called Lapland, and you stay in these wolf chalets and see the northern lights, and the wolves run around outside your cabin right behind the glass." And yeah, that was a little expensive. So it was very expensive, and plus you got to get over to
Canada
Scandinavia.
was a little more inexpensive.
Yeah, and then this one popped up. We were like, "Oh, that's a little more doable." So fun time, Park Omega. If you ever want to do an adventure that's really neat and relaxing too, great time.
That's awesome. It looked like you guys did so much fun. I was looking at the pictures you were sending.
Yeah, we had a blast. Good time.
Um, Speaking of who is also having a great time, is Amazon. What I'm sharing here is quarterly revenues in billions of dollars. And it's comparing Amazon's to Walmart's. And Amazon, not too long ago, in quarterly revenues flew by Walmart, but they've really just in the last even month or two just blown by them even more. Um, it's just amazing to see. I mean,
Yeah,
if you showed this to someone back in 2005, they'd go, "What? What is Amazon? Do they
yeah,
sell books? You know?" And you look at this now, and my goodness, it looks like there's no turning back.
yeah. I was on the trading floor in Philadelphia, stock exchange trading floor, when Amazon first kind of was something people talked about. And the name, now we're used to weird names, Meta, Facebook, Google, but Amazon, why'd they name the company that? Shouldn't it be like International Business Machines or something? And so people were talking about it, and you're saying, what is it? And they're like, yeah, you can buy books through the internet. And
Yeah.
it just seemed like, really? That's because it was all Barnes and Noble and those kinds of companies, and you're just like, really, is that going to work? And of course, Jeff Bezos powered it into this thing that so many of us use all the time.
Yeah.
Although I got to give credit to Walmart. They
How they've stuck
initially,
around?
well, for a while, people were like, listen, Walmart's going to go the way of Blockbuster. They're going to be gone. It's all online. And nope, Walmart's done fabulously well. They basically said, well, we're not going to, we're not going to ignore this opportunity. We're going to jump on board as well. So pretty cool. Yeah,
Yeah.
Amazon's
For
rise in revenues is impressive, but Walmart has hung tough, and they're doing great.
for those of you listening, I'm referencing a chart from Y Charts, and it's showing a quarterly revenues in billions of dollars. Amazon at $213 billion about, and then Walmart at 179 billion, which
Yeah.
is just amazing. Because Walmart, if you look at this chart, has dominated for so many years. Amazon, obviously, being a younger company, tenure-wise than compared to Amazon, but still, Amazon's just
So
seems to,
these
seems
are
to be taking over.
quarterly revenues, and we're saying the words 200 billion. I mean, right? Even that among itself, by itself, is just staggering.
And I know, inflation, the dollar isn't what it
I
was
get it.
20 years ago, but still, that is a lot of money.
Yeah, that's
Yeah.
impressive.
Yeah.
Staying on stocks. So Disney. So Disney, if you think about Disney is, I'm simplifying, but Walt Disney Company, whose stock is right where it was 10 years ago. It's about 105 a share right now, and that's right where it was 10 years ago. So 10 years of almost zero returns in Disney shares. But Disney, to simplify it for somebody like me, it's kind of two main segments. It's kind of everything you see on a screen. So film and TV, like Walt Disney Pictures, Pixar. They own Lucasfilms, like Star Wars, Indiana Jones now. They also have ABC and ESPN. They also have Disney Plus and Hulu. That's all stuff you see on a screen. And the second major segment of their business is experiences. So cruises, the Disney World, the theme parks, and a bunch of other things. Let me show you this. So this is an image showing Disney's share of operating income from 2015 and also currently from 2025. And you can see 53% of the bulk of Disney's income was driven by the stuff on screens in 2015. And only 21% came from theme parks and experiences, cruises, and so on. Here in 2025, it's completely flipped. Now it's all about all their operating, the cash cow for them is theme parks and cruises and things like that, experiences. 57% of their income comes from that, and only 17% from TV and streaming and movies. Huge difference. I mean, giant difference. And then lo and behold, what happens? Well, just a few weeks ago, Disney announced that Josh D'Amaro will become the next CEO of Disney in a month from now. He's going to succeed Bob Iger. Apparently, the new CEO has been with Disney for 28 years. And of course, he is the chairman of Disney Experiences currently. So he's in charge of that segment that is the biggest cash cow for them. So Disney's going to lean into the idea, of course, hey, listen, the thing that's making us the most money, let's make the next CEO a person that has been in charge of that.
I wonder from the theme parks, I'd love to see a breakdown of which theme parks generate the most revenue. I'd imagine the one in Orlando is enormous in that sense, but because they have Tokyo, they have Tokyo, Orlando, Paris, California, Hong Kong, I believe, and a few others.
Yeah. Yeah, it'd be actually. I'll look into that because that's actually a good question. I'd love to see that. Yeah,
That's an interesting chart.
yeah. Things change.
Yeah. So I've got this piece here from Carson. A lot of people have been asking me, "Hey, what's going on with the market in February?" And I saw this the other day, and it's in my experience true. Historically, February has been weak for stocks. The S&P 500 index average monthly returns. This shows from 1950 to 2025, and for the past 10, 20, and really since 1950, February has been a flat month for the S&P 500, according to Carson Investment Research in this chart.
Yeah, that's interesting.
It then picks up in March and April, and you get the, um, it doesn't always have to do this. Past performance is no guarantee future results, of course, but when you look at this, it's February and honestly August and
Yeah.
September
Well,
that are
that's what
the that are the 3 months out of the year typically, especially during midterm election years,
yeah.
that are rough months.
Yeah, my brain always thinks that August, September window is always when, you kind of hold your breath. But February, yeah, February's another one too. Yeah. Look at that bar for the midterm election
I
year
was
in
just gonna
June.
say for those of you listening, this chart shows a dark line on it that is the representative of the midterm election years for each month, and it basically is saying, listen, for most of the year for most of the months out of the year during midterm election years, going back to 1950, it's been rough for midterm election years for stock market returns from January through September. Then once October, November, and December hit, there's a big upswing. It doesn't always have to be the case, but usually there's a big upswing in the
Yep.
S&P 500 index during midterm election
And
years
you've
in
heard
those
me
in those
say
later
this,
months.
you've heard me say this, and clients have heard me say it, but I'm a simple guy. I look at it like this. The media is going to scream about the midterm election. It's coming, it's coming. Here are all the issues. And investors hear that and they kind of, hold things close to the vest. And once you get to the point in the year where maybe the midterm election's not over yet, but, August, September, maybe October, get to the point where you go, this thing will be over soon. This chart shows that historically in midterm election years, the stock market, if it hasn't done so already, by the latter part of the year starts to do really quite well in most of those cases, not all cases. And I don't know if it plays out this year, but that makes a lot of logical sense to me that people worry about the midterm election, and then once it seems like, oh, this will be over soon, they kind of say, forget about it. I'm not worried about it anymore.
Exactly. Yeah.
Pretty cool. Uh, so international markets. We in our portfolios here have been mostly U.S. focused for about 15 years. Started a little while ago to start to work our way into additional international exposure in stocks because 15 years of U.S. outperforming international makes them inexpensive. One of the things we tend not to buy a lot of is emerging markets. So emerging markets are international stocks, but stocks from countries that are tend to be maybe a little more fragile, a little more frontierish. This is kind of interesting. Check this out. So there's an exchange traded fund that buys a basket of emerging market stocks. That's the symbol is EEM. It's sort of like the S&P 500 sort of the emerging markets. It pretty much buys them all, diversifies amongst them, and that's a very popular exchange traded fund if you really want to get exposure to international emerging markets. There's also one symbol FRDM, the Freedom 100 Emerging Markets ETF, that buys emerging markets, but it specifically excludes basically authoritarian regimes, however they define that. So, for example, no China, no Russia in that one, the FRDM. And so, you kind of say, well, when you start to really splice things down like this, can it be beneficial, or are they just creating something for marketing or over engineering it? So check this out. This is a 2 year about chart of about 2 years of the regular old EEM broad emerging markets that include China, Russia, and a few others that that maybe could be considered authoritarian, and then the FRDM, which excludes those. And over the last 2 years, 2 to 3 years, the FRDM has far outperformed the EM. I mean, the one that excludes those regimes is up about 100%, whereas the EM is up, but it's only up about 50%. Kind of
That's
interesting, right?
wild. No, we don't always talk about private companies on this podcast. We usually talk about public companies. But I found this from Yahoo
Oh,
Finance. The most valuable private companies in the U.S. SpaceX listed at number one at a valuation of
s-
$854 billion. OpenAI number two at $500 billion. Anthropic,
Anthropic.
pardon me, Anthropic, that's a tongue twister, at 354 billion, and it goes on from there. I won't read the whole list, but just an interesting image because I feel like these days private companies are getting very, very valuable as opposed to, 10, 15 years ago. Am I wrong in assuming that?
No, you're right. I mean, the amount of money in privately held companies has been expanding.
Yeah.
Rich people and institutions buying before they go public, which is a risk. It's much more of a risk than when they go public. But yeah, we're seeing more and more of this. Like that SpaceX. I mean, everybody's holding their breath for a possible SpaceX IPO later this year. And of course, if it does, become public and initial public offering IPO, I got a feeling a lot of retail investors are going to clamor for it. But will it be priced right? Who knows? I mean, we'll see. And none of us will know at that time. But if it's really priced insanely too high, we'll kind of be able to sniff that out probably.
Well, that's what leads me to my next point from this is from Chartar. Um, to the moon and beyond, SpaceX's $1.5 trillion IPO goal in context. So basically saying, listen, SpaceX is very, very valuable in the private market, but um, are they going for this, this $1.5 trillion IPO goal? Is that too lofty? Basically, because they're saying that it would be the second highest IPO valuation according to this chart. Saudi Aramco was the largest, and that was back in 2019 at 1.7 trillion.
Yeah. Yeah, it'll be interesting. I mean, SpaceX is a monster. We'll see.
Yeah.
We'll see.
To put that into context, the next closest one is Alibaba in 2014 at 231 billion. I mean, far behind what SpaceX is going for, 1.5 trillion in IPO.
Gee, that is amazing. 1.5 trillion versus the next one beneath it at 200 billion and change. And that's Alibaba. It's kind of the Amazon of China.
It's a major
It's
company.
not
Yeah,
not like it's nothing.
yeah. It'll be
Yeah,
interesting to see what
it's
happens with that with
hey, look
SpaceX.
at the what's the number on the Facebook IPO? I'm having a hard time reading it. Is it
The Facebook IPO is 104 billion in 2012.
104 billion in 2012? So 13, 14 years ago, 104 billion dollars for
Uber, major
Facebook. And
company, in 2019 was 75 billion. AT&T in the year 2000, now, granted this was 25 years ago, 68 billion.
yeah, yeah, wow.
Yeah,
Oh, SpaceX is going to be talked about a lot this year.
I agree.
I don't know if you're ready. I'm going to do something here on real estate.
I was going
So
to move to real estate
this,
too.
all right. So this is a chart from Redfin, and Redfin is showing the weekly data for homes for sale and the median number of days on the market. So you list your home and it's on the market. What's the median number of days it sits on the market? So two things from this chart. It goes back to 2017. Um, Basically, we've got the average number of days on the market or median right now is about 55, 56, 57 days, right around there. And you look back in 2022, I mean, I think we all remember that. I mean, people were buying houses sight unseen just from the internet, pictures, no waiving inspections, paying all cash. I mean, in 2022, it was crazy. And the median number of days on the market was, says here, about 17, 18, 19 days. And now we're back up to what I think is a little healthier. I mean, sellers don't like this, but it makes a little more balance between the sellers and the buyers, having it up at about 55 days. The other thing that's interesting from this chart is there's a whole lot of, constant hooks up and hooks down. And when you kind of look at it, what you realize is what real estate agents say all the time, and it makes sense, is,
It's
you know, the,
cyclical.
the, based on the what months of the year are you trying to sell? If you're trying to sell in November, December, January, maybe February, it's a little tougher. Your house is going to have a harder time selling. But once you get into that spring market, the number of days on listed on the market, it really, really drops because, I mean, real estate agents always say this, is because people want to get into the house before the school season starts. And if you settle on a home in March, April, May, June, you're probably getting in there before school starts in August or September for the kids.
Yeah, that makes a lot of
And
sense.
I got one more on real estate that plays with this. So homes are staying on the market a little longer. There's a little more balance between buyers and sellers. And then this chart from Arbor Data Science is what it's basically showing is the that sellers seem to be more willing to sell their homes than in previous years. There are more people willing to sell than in a long time. Home sellers outnumbered buyers by 47% in December of 2025, and that's the largest gap since Redfin began collecting the data in 2013. So, and
Which
again,
is
you can see on
amazing
this.
because look at the difference in 2022 compared to 2025, just a short 3 years later. That's
Yeah,
unbelievable.
I mean, in 2022, home buyers outnumbered sellers. Everybody wanted to buy, nobody wanted to sell, to the tune of 36%. And now it's flipped completely the other way, whereas home sellers outnumber buyers to the tune of 47%. So I doesn't mean if you're a seller you're in trouble. It just means that it's a lot more balanced between buyers and sellers than it was before, which
Yeah.
I think is healthy. It enables better price discovery on properties, gives young people who want to start a family a better chance at buying a home, even though it's remarkably difficult still financially. But this helps a little bit.
Yeah. It definitely helps. It definitely helps. I don't think home prices are going to come crashing down. It'd be nice to see a little bit of, for the sake of the first time home buyers, it'd be nice to see a little bit of lag in or a delay in any more price increases, drastic price increases in home prices.
Yeah, I
Yeah.
agree.
For the home owners, I'm sure they don't want to see that. But
No, it's not
uh,
what you want.
all right, sticking on the topic of real estate here. So last week I talked a lot about basically debunking are giant institutions like, just using examples, BlackRock, Vanguard, are they buying up a lot of the homes in the U.S. and starting a monopoly? I got this piece here from First Trust basically saying not really. I know I talked about this last week, but it's just more evidence here. So
Oh, this is cool. I
this
didn't
chart from
see this.
First Trust Investments. I know there are some people listening, so I'll talk about it. While headlines often cite investors accounting for 30%, 34% of home purchases in the third quarter of 2025 as evidence of crowding out, this figure overstates their true market footprint. Investors transact far more frequently than owner occupiers, inflating their share of purchases relative to actual ownership. In reality, the single family housing market remains overwhelmingly owner occupied. As of June 2025, more than 86% of homes were owned by individuals, while large institutional investors, meaning 100%, 100 or more properties owned, accounted for less than 1% of total housing stock. Most investor owned homes are held by small investors with fewer than 10 properties. So it's basically saying, listen, institutional investors, meaning companies that own 100 or more properties, they do a lot of turnover. They flip a lot of houses. That's why their numbers are overstated and overinflated for their actual market footprint, what they own of the residential real estate market. Now, a lot of, investor owned homes, meaning people who, average Joes like you and I who own a lot of rental properties and let's say more than 10 properties, that actually makes up a good share, a bigger share than institutional investors ownership, just because there's a lot of people that make real estate a supplemental income, or they make it their business. That's what they do, is they rent and flip houses. But still, the bulk of home ownership in the U.S. in residential real estate, 86%, according to this chart, are owned by individuals, just families, just
Yeah.
owning homes. So just goes to show again, the whole giant companies are taking over all of the residential real estate in the U.S., or at least most of it, is really, really not true.
Yeah. No. So if you look at this chart, you can kind of see where the institutions own more of the homes. It looks like Nevada,
Florida.
Arizona, Florida, Georgia. That's where so if you're in one of those places and you're in a specific community where maybe an institution has bought up a ton of the homes, yeah, it's impacting you. But the vast majority of those headlines about this are really just clickbait. That's all they really are.
Yeah.
Yeah, that's a great image. All right. So I got a listener question, and it was about basically there have been a lot of headlines lately about the U.S. dollar. It seems to be great clickbait material. You know, the U.S. dollar's been going down. That means everybody's in trouble or something bad's going to happen. They can spin it any way they want. Oh, this is a chart of the U.S. dollar compared to a basket of currencies that aren't the U.S. dollar, going all the way back to about 1970. And, U.S. dollar index right around 97. That's where it was in the year 2018 or so, 2000. It's where it was in 1987. It's moved back and forth. The dollar goes up, the dollar goes down, but generally, I mean, this is just a very normal thing for the dollar. When the dollar goes up too much, everybody writes articles about that being bad, and when it goes down, they write that that's bad, and it's just, listen, currencies fluctuate. It's what they do as capital flows around the globe. They're always going to fluctuate. If you zoom out from the last couple of years, you kind of look at this chart, which zooms out way further than the last couple of years, and you go, this is just what it does over time. In general, it hasn't moved a lot compared to where it's been in the past. It's kind of right where it was. So it doesn't mean the dollar's perfect, doesn't mean someday it can't be replaced. It just means that this is very normal, and the headlines are generally something that's more motivating you to consume more media than actually make good decisions based on what the dollar is or isn't doing.
Yeah, I agree. Yeah. The dollar movements are used as a big fear tactic by the news, unfortunately.
Yeah, I agree.
I had someone ask me the other day in a meeting, gosh, NVIDIA has gotten to be such a major company, not only the stock, but the company in general has gotten so important, so powerful. How big is NVIDIA? And I did some digging and went to my one of my favorite pages to find graphics, and I found this on Visual Capitalist. So how massive is NVIDIA? NVIDIA's $4.6 trillion valuation would rank it as the world's fourth largest economy, behind only the US, China, and Germany. With just 36,000 employees, NVIDIA is valued above Japan's annual GDP. That is ridiculous.
Yeah, that's amazing. I don't know what to say, because they continue to dominate, selling tons of things, including artificial intelligence chips, to companies that need and want them. But that is, I mean, you're not talking about fourth largest company, you're talking country.
I know this can be said for a lot of stocks and companies in our business, but imagine time traveling back 10 years to 2016 and showing an NVIDIA employee this image.
Yeah. Yeah.
Someone who's about to quit their job at NVIDIA. Wait.
Yeah.
Look at this image.
They would start shoveling money into the employee stock purchase plan that day, and then tell you not to tell anybody else that you have this picture from the future.
Yeah. Don't show that to anybody else.
That's great.
Just amazing, though. Just amazing.
I mean, and the funny thing is, NVIDIA, who knows, but in 20 years, will NVIDIA be one of the largest market capitalization stocks in this U.S. stock market or the world at that time? Maybe, but
not,
maybe
though.
not. When we look back over 10, 20, 30-year periods, you see that those things change all the time. I mean, Exxon used to be king of the hill.
But that's really king of the hill. I'm not saying it can't come to an end, but there's probably only been a few companies that have that stat of ranking as the world's fourth largest economy behind, three of the biggest economies currently.
All right, I'm tagging that section of the podcast, and we'll revisit it in 10 or 20 years.
Yeah,
that's recency bias right there. And I have the same thing. I feel the same way. Who's going to knock those guys off? And then time passes, and right now there are tons of engineers and smart people at companies saying, "Hey, NVIDIA has almost the whole pie. How do we get a slice of it?"
Yeah,
and they chip away at it.
Yeah.
So I don't have anything else.
No, I don't have anything else. Looking forward to this weekend watching Six Nations rugby.
Oh, that's right.
Yeah,
Six
rooting for
Nations is still
Scotland.
going on.
And then hopefully we get the. I know this podcast will come out probably after this game, but hopefully we get a Canada-U.S. hockey matchup on Sunday morning. That'd be fun to wake up to Sunday
Yeah,
morning.
that'd be fun in the gold medal game.
Oh yeah,
Yeah,
oh yeah,
Canada's really good.
yeah, yeah. Sidney
Although they
Crosby,
lost,
I think, got hurt for them recently
yeah,
though, which is a big loss.
I was going to mention that.
Yeah, I can't believe that
Yeah.
guy's still playing hockey. I wonder how old he is.
You know, I thought I heard somebody say the other day he's only 29.
That's unbelievable. Because
Does that sound right? Well, he
I,
was so young when he came
yeah, but
in to
here's
the
the
league,
thing. I,
though.
I remember watching him play for the Penguins 10 years ago, back in 2016, and it seemed like he'd already been around for a while at that point. So he would have been 19. When did he start in the NHL? 16?
All right, I got to look because I feel like I'm wildly wrong on what I think I heard. Um, oh, I'm such an idiot. You can tell I haven't been watching very much hockey. He's 38.
Oh, okay. I was going to say,
I
there's
must
no way.
when I heard that on the radio, I just obviously confused it with somebody else. But when I heard that on the radio, I thought never mind. I
Yeah.
forget it. I'm done on that. Obviously,
Yeah.
I'm wrong. So hey, I got one thing. So movie I haven't seen, but I do really want to see, and I don't know if you've heard of this, but Crime 101.
Have heard of it, have not seen it.
Yeah, I haven't seen it. I'm going to go see it this weekend. Great cast. I mean, Chris Hemsworth, Holly Berry, Nick Nolte, Mark Ruffalo.
Is it in theaters?
Um,
What's it on?
it's in theaters. I think it came out about 6 days ago. It's in theaters, so you got to go to the theaters. Just a synopsis: a master thief and insurance broker join forces for a big heist, while a determined detective pursues them to prevent the multi-million-dollar crime. It's supposed to be really fun. Rotten Tomatoes audience score, I think, is up in the 80% area. So, and the critics too, which is unusual. So yeah, it's just something fun. If somebody's looking for something fun to do, I'm guessing it's good. We'll see. I'll watch it, and if it's bad, I'll tell everybody.
Perfect. All right. Got a movie in the movie theater we can go see. It's been a
That's
while
right,
since
in
I
the
did
theater. I'm actually looking
that.
forward to that. I missed that.
Yeah. Yeah, me too. I'm really, really glad that those they're still around, movie theaters.
Yeah, yeah.
All right, everybody. Well, thank you as always for listening. We are now on YouTube, so check us out on YouTube. And yeah, have a great day. We'll see you next time.
Thanks, everybody. Bye bye.
The Capital Clarity podcast is presented by FA's Keith Wagner, AA, MS, Financial Advisor, and Rick Wagner, CFP, Senior Vice President, Wealth Management. This podcast is for informational purposes only and is not intended to be taken as financial advice. All opinions expressed are of the hosts and do not necessarily represent those of Raymond James. Opinions are as of this date and are subject to change without notice. Investing involves risk, and you may incur a profit or loss regardless of strategy selected. Prior to making an investment decision, please consult with your financial advisor about your individual situation. 2003 South Easton Road, Suite 100, Doylestown, Pennsylvania 18901, 267-742-3455, Raymond James and Associates Inc., member New York Stock Exchange SIPC. The S&P 500 is an unmanaged index of 500 widely held stocks that is generally considered representative of the U.S. stock market. The Dow Jones Industrial Average, DJIA, commonly known as the Dow, is an index representing 30 stocks of companies maintained and reviewed by the editors of the Wall Street Journal. Inclusion of these indices is for illustrative purposes only. Keep in mind that individuals cannot invest directly in any index, and index performance does not include transactions, costs, or other fees which will affect actual investment performance. Past performance does not guarantee future results. 529 plans come with fees and expenses, and there is a risk they may lose money or underperform. Most states offer their own 529 programs, which may provide benefits exclusively for their residents. Please consider whether the state plan offers any tax or other benefits. Tax implications can vary significantly from state to state.